There are three common reasons why homeowners refinance, and these are to lower their rate, consolidate debt, and shorten the loan term. In this video, I'm gonna explain what each of those mean and the benefits behind them. So let's start with number one, which is lowering a rate, which is the most common type of refinance that you might have heard of and that we see. It sounds exactly like what it is. It's getting a lower interest rate than what you currently have on the mortgage. So when does this make sense? Well, it makes sense if you're gonna go ahead and save enough money monthly to actually cover the cost of the refinance. So your short-term goals and your long-term goals will be a big determining factor in how much you need to save in order for the refinance to make sense. How long do you actually plan to keep the mortgage? For example, let's say you currently have a $400,000 mortgage at 7.5% interest and you plan to keep the home for another 5 years. If you're able to refinance and receive a 6.5% interest rate with $7,000 in closing costs, your monthly principal and interest payment would be reduced from $2,797 to $2,528, which is monthly savings of $269. So this is equal to saving $16,140 over 5 years. And if you plan to keep the mortgage that amount of time and the cost was only $7,000 to refinance, you're coming out ahead by over $9,000, meaning it makes sense for you to refinance. However, if you only plan on having the mortgage or the home for 2.5 years or less, the refinance would not make sense since the cost would outweigh the savings. Now, the second reason to refinance is to consolidate debt. This is another extremely popular reason for someone to use equity in their home to refinance. So if you own a home and you have equity in that home, which is the difference between what you owe on the property and the home's value, you can use a portion of that equity to pay off other debts other than the mortgage, such as installment loans, credit cards, student loans, things of that nature. Now, the idea behind debt consolidation refinance is not necessarily to get the lowest possible rate. Instead, the goal is to reduce your overall monthly debt and your household APR. Surprisingly, it often makes sense to take a higher interest rate on a mortgage than what you already have when you're consolidating debt. And this is because the goal is to lower your monthly payments as a whole and not just on the mortgage. In turn, this will reduce your household APR. Your household APR is the average amount of interest you're paying on all debts. This includes cars, credit cards, student loans, and of course, the mortgage. So to calculate your household APR, you would add the interest rates on all of your debt together and divide by the number of debts you have. So even if you have a low mortgage rate, your household APR may be much higher if you have other debts with high interest rates. The interest rate on the mortgage becomes less relevant when you're able to use a mortgage to pay off multiple high interest debts and combine them into one low monthly payment. The third reason to refinance is to shorten the loan term. The most common, but also the most expensive loan term is a 30-year fixed rate. It's the most expensive because you're paying interest for 360 months. So the longer you pay interest for, the more interest you pay. Refinancing into a shorter term, such as a 15 or 20 year, can save hundreds of thousands of dollars versus a 30-year mortgage. On top of paying interest because you're paying in a shorter period of time, mortgages with shorter terms typically come with lower interest rates than those with the longer terms. And here's an example. On a $400,000 mortgage at 7.25 over 30 years, you would pay $982,440, more than double what you originally borrowed. However, a $400,000 mortgage at 6.25 over 15 years, you'd only pay $617,400. In this example, you can see that the shorter term would save over $365,000, which is almost equal to the cost of another home, which is absolutely crazy. So if you enjoyed this video and found the information useful, please subscribe for more videos just like this one. Also, don't forget to leave a comment about your specific scenario or any questions you might have from the information we just discussed. I respond to 100% of the messages I receive.